This is Bazaar Morning Call, broadcasting live from the CNBC TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. This is a Wednesday morning. We are coming to you live from the CNBC TV18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Sonia and Nigel. Guys, hi, good morning.
Hi, good morning, Prashant. Morning, Nigel. Well, it looks like things are not too bad. A lot of positive cues that the market has to work with this morning. So it's going to be perhaps a continuation, more of the same, an uptrend.
Well, appears so, guys. And, yesterday the other big trigger that came in, or big cue that came in, was the holiday list of 2024. You have 7 long weekends.
Really?
So, and Sonia, I know she's always on top of it. I know Sonia was somebody here. She'll be on top of it. So, it's...
Nigel is the bearer of good news. That's
absolutely. Absolutely. I mean, but... yesterday that list came in, and we have 7 long weekends, so it's you can really plan.
Nigel, don't publicize it so much. Just quiet, as they say in office. Pehle rumal dal do. So, well, that's good news, Nigel. Thanks for that. Let's just quickly tell you what you need to know as we begin another trading session, and it's basically. Yesterday was different, and yesterday was different because we finally got a negative close, and we're not used to that. It was a pullback. I mean, 0.5%, not even a 0.5% pullback, but the fact is it was red in the screen. Market breadth was negative, and a lot of sectors which have been going up saw pullbacks. We also, in technical parlance, saw something which is called a bearish engulfing candlestick. So the market basically opened higher and then completely gave up most of those gains, and that entire candle was kind of engulfed on the downside, almost all of it. So it's not a technically very strong signal, and it's coming after, of course, a non-stop rally that we've had. I mean, after a pretty large rally that we've had. The question which I think we will know the answer only in hindsight is if we are starting to kind of plateau out a little bit, at least in the near term, and whether this leg of the up move perhaps is done. But I'll come to this question with levels, etc., in just a bit from now. Overnight cues, well, they're pretty positive. S&P was up about 0.5%. The Nasdaq was up about 0.75%, and things are looking pretty okay if you just look at that. You also had the US CPI numbers which came in. They were in line with expectations, the core CPI at least. But I mean, services inflation is still sticky in the US, and that is the reason why. I mean, if you read the New York Times or the Washington Post or the Wall Street Journal, one says inflation in line, other says inflation still a problem, and the third one is something else. So, it basically depends on how you look at it. But the fact is, we will know very soon because the Fed will meet tonight. The decision is tonight. We'll know, of course, the decision tomorrow morning. They are expected to be on hold. And in terms of Fed pricing, post the CPI, there has been no change. So they are still expected to be on hold. And Fed Chair Powell will be addressing the press and taking questions, etc. So it'll be closely watched for only one thing. The market is pricing 100+ basis points of rate cuts in 2024. Is he going to push back on that, with any great conviction? That is essentially, will he want to tell the market that don't get so excited, rate cuts perhaps are further away than you think. So I think that's what is important to watch. Remember, the risk, of course, which nobody is pricing in, is that inflation will once again be a problem. Markets are not positioned at all for inflation to raise their head once again. So I think at the margin, I mean, that is the risk. Now, US 10-year yields, they lost about 3 basis points. The dollar index fell about 0.28%. I mean, basically just reversals of what we saw the day before. But oil prices have seen a significant sell-off, almost 4%. Now we're at about $73.5 on Brent crude oil prices. I mean, OPEC and OPEC Plus and all these organizations have said, we'll do this, we'll do that, output cuts, rolling output cuts, but market doesn't believe. And prices continue to come off. Now, just to circle back on the Nifty and Bank Nifty, what are the levels? For the Nifty, as I said, you need more confirmation after yesterday's negative close. Confirmation for what? Confirmation for the fact that maybe, this move is maturing now on the upside, which has been, pretty spectacular. How will we know that? You'll watch for a close below 20,850. I mean, that is the low, the recent low, which the market has respected. If we get a close below it, I think that'll be the first kind of signals. On the upside, there is unfinished business at 21,100. I mean, a level we've put out for a while now. So we'll see if that gets taken out. Then, I mean, the point is medium term, the trend is up. We're just talking very near term and asking the question whether the trend is maturing. If these levels get taken out on the upside, then the answer is no, and the market moves on. The Nifty Bank closed lower yesterday, but did not break 46,852 on close. What is that? That is the 40-hour exponential moving average, and that is something which, I'll watch out for. And resistance for the Nifty Bank is the recent high, which is nothing but 47,588. The GIFT Nifty will come up on your screen. It's going to be a 50-point higher start, but I would say if you are trading, give it one more day. You don't have to chase the market higher. You've done very well. The Fed decision, the Q&A, etc., could spring a surprise or two. If not, I mean, there's always tomorrow. It's not as if the opportunity is going anywhere. Sonia.
So, a couple of things, right? On the macro front, I think things are improving. The US CPI, as you said, has cooled off. Even the India CPI, the India inflation numbers are lower than what the street was estimating.
Yeah.
So the poll was 6%. The CPI data came in at 5.5%. Now, let's not forget, it's still above the Reserve Bank's medium-term target of 4%. But a cool-off in CPI is something that may once again give rise to chatter about the rate cutting cycle. Of course, no one is expecting it before the first rate cut before August of 2024. But be that as it may, the rate sensitives may come back into focus. So I'm watching out for, rate sensitives like banks, real estate, etc. Because of the CPI being lower than expected, these are a couple of pockets that could look good. The Nifty will continue its uptrend, no two ways about that. The US markets were quite strong. There's that, of course, that rate decision that's expected. The Dow was up almost 200 points. But the other big trigger is the fall in Brent crude prices. Brent crude is now at a 6-month low, and it's been falling because of inflation woes. Oil marketing companies is something that I'm looking at. There could be a bit of a rally in the oil marketing companies. They have corrected a little bit, so maybe there's some elbow room on the upside. So that's one pocket that I'm watching closely, apart from the rate sensitives like banks and real estate. Now, there was a lot of buying. In the last many days, we've seen buying both from foreign and domestic investors. Yesterday, almost 2,000 crores of buying from DIIs. FI flows have thinned out a little bit. And there's a new IPO that's opening today. The DOMS IPO opens today, so all eyes will be on that as well. A couple of big triggers lined up, but I think the going is good. The setup for trade looks positive today, and we have a couple of positive indicators. The fall in crude as well as cooling off of India inflation, something that the street may latch onto.
Well, Sonia, if we didn't have the Fed meet later tonight, you would be saying go in there and buy the Nifty today. Yeah. Global cues are positives, crude is lower, and the yields as well are lower. Yeah. But today the markets will wait by to hear what the Fed has to say and then take further action. For today's session, the Nifty Bank will be important, particularly in the second half of trade. After a while, it had a bit of an off day yesterday. And today will be the weekly expiry, so expect volatility to pick up in the second half of trade. What did the FIs do? Yet again, they covered some shorts, they added long positions, and now, in fact, the long positioning goes to around 60%. And if you just look at the cues that came in from yesterday, the institutions, FI and DI put it together, they bought close to around 2,000 crores. The FI net long positions are around 50,000 contracts. Ain't we missing the FI shorts, right? In the past, we haven't seen net institutional buying numbers. You had the FIs that were net short, and yet the markets were moving up. Now you have the reverse. You have them adding long positions. You have institutions buying, but the markets were a little bit lower. So that short covering is out of the way. Now we are depending on the cash market buying to push us higher, both from the domestic as well as from foreign sources. Now, if you look at the chart that should come up for you on the screen, in the last 1 week or so, well, the markets are more or less flattish. 4 sessions ago, we went to around 20,850, and 4 sessions later, we're still around those levels itself. And in this time period, you've seen the FI net long position move from around 20,000 contracts to around 50,000 long contracts. And yet we haven't seen any kind of follow through. So that's giving you the kind of importance that the cash market buying has to do from here on. The Nifty Bank, well, that's the important one for today. And yesterday we saw some writing. 47,200, 47,300 calls, both of them saw a fair bit of writing, which brings us to the levels. Since we're seeing writing at those levels, the 47,350 as per the options data becomes important, and the 47,500 call has the highest open interest. So that is the resistance zone. On the downside, the 46,500 level, you don't want that to break decisively. On the Nifty, we have been facing resistance at around those highest levels. So 21,050 becomes an important mark. I say that because the 21,000 call as well has been seeing a fair bit of open interest build up, and the premium out there is around 50 rupees. So that's a crucial resistance zone. And on the downside, once we broke the 20,700 mark, we went to around 20,800. And from there, despite numerous times we've gone and visited that level, we have bounced off that mark. So that becomes a crucial support zone. The gift Nifty suggests a positive opening, but I think the markets will want to wait to hear what the Fed has to say and then take future action. But otherwise, global cues that are coming in very, very positive.
Oh, absolutely. And any hint of the loosening of the monetary policy, something that the street will just grab, right? I'm not saying that it's going to come in this Fed meeting, but that's something that the street is definitely watching out for. On the equities front this morning, we have a comment coming in from Rhythm Desai of Morgan Stanley, so let's go straight to it. He says, with strong earnings, macro stability and domestic flows, it is hard to argue against India's investment case. That said, he adds, an event-heavy calendar with potentially binary outcomes sets the market up for volatility. After having been less volatile than ever, their portfolio strategy includes cyclicals over defensives, large caps over mid caps and small caps. They are overweight financials, consumer discretionary, industrials and technology, and they are underweight other sectors. He says while we are in a macro market in contrast to a stock pickers market, the macro trade could peak in 2024.
All right, we'll get you some money market views now. Kunal Sudani of Shin & Bank says US November CPI fuel dovish bets and the Fed and Powell will likely maintain a cautious tone without considering rate cuts and neither a victory on inflation. However, he adds markets will scrutinize the dot plot to see how the FOMC projects 2024. He says the dollar index is finding resistance at 104.3 levels and crude oil prices have cooled off. For the rupee, he says 83.2 acts as a support while 83.5 is a resistance.
And on the bonds, Neeraj Gambhir of Axis Bank says the lower US Treasury yields and crude oil prices nudged domestic bond yields lower at the start of the week. He says the MPC maintained a status quo unanimously on policy rates. However, he adds worse than expected cutoffs at GSEC auctions led to a sell-off post the MPC. He says the 10-year benchmark bond yield is expected to trade in a range of 7.2 to 7.3% this week as the market awaits CPI data and the FOMC outcome.
Well, we've got a lot of stock-specific action to track for you. For the time being, let's run you through the list. We're looking at Axis Bank, ITC, Indian Bank, Shilpa Medicare, SRF. All of them will be reacting to positive news flow. Add to the list, Interglobe Aviation. On the flip side, we have Loris, All Cargo, KIOCL, and ONGC that will be reacting to negative news flow.
All right, that's basically stocks which are on our list. Dean